Let's look at how to select an ETF in terms of criteria such as price growth, volatility, and diversification. The website justetf.com has an excellent screener that can help you find the ETFs that meet your criteria. So we're going to look for equity, we're going to look for region in terms of world, we're going to look for an age older than 5 years, and we're going to look for a size larger than 100 million. And then what we can do is maybe look at something like 5-year return, sort on those. Now initially we've got some sector ETFs and we've got private equity as well, but when we come down a little bit further we end up with things like VanEck, developed markets, or some world GBP hedged ETFs. I used to like quality factor ETFs because I felt that they were selecting the better companies that were more robust. And then I also used to like momentum ETFs because why not invest in companies where the prices are rising? However, due to the nature of how these ETFs can work in practice, they've actually underperformed a global tracker over the last 5 years. And so therefore, I'm now not really keen on these factors. This is the momentum factor ETF. And if we scroll down to the holdings and then look at some of the PE ratios, they end up being pretty crazy. So this is Costco and the PE ratio 52. Then if we come back to something like Eli Lilly, we've got a PE ratio of 71. So it's not just the Magnificent Seven and their PE ratios that is causing the US market to be overvalued. It's things like Broadcom and Eli Lilly as well that make me think that perhaps the S&P 500 won't deliver optimal growth over the next 5 or maybe 10 years. We finally got an ETF that is MSCI World X USA, and the ticker is XMWX. And if we look down, we can find out things like the country exposure, Japan number 1, UK number 2. Then we've got the country exposure here. And what's really interesting is that the concentration in the top 10 isn't that great at all. It's only 12%, which is a complete contrast to the US. In terms of the sectors, we've got financials number 1, technology coming in at number 4. So I think this is a potentially interesting ETF. Here we've filtered ETFs in terms of maximum drawdown over 5 years, which is the greatest decline you'll have seen from one high to the corresponding low. The VanEck Morningstar Developed Markets Dividend Leaders ETF is at the bottom of this table with 11%, which is still very respectable, and at the top of the table is the Vanguard All World High Dividend Yield ETF with minus 8.5%. So a lot of these ETFs are quite similar in terms of what they're doing. You've got a lot of dividends in there and a lot of minimum volatility, which is specifically targeting lower drawdowns in terms of the performance of the ETF, but often at the sacrifice of price growth, which you can see in the 5-year column. If instead we filter the ETFs in terms of return over risk on a 5-year period, then the VanEck Morningstar Developed Markets Dividend Leaders comes at the top of the table with a score of 1.54, which is ahead of the next ETF, which is the Amundi Global Equity Quality Income, coming in at 1.34. I think it's a very credible performance for our VanEck ETF. Over the last 5 years, the size factor has been able to beat a global tracker, and this is shown by the L&G Global 100 in orange, beating the global tracker in blue. But recently, the VanEck Morningstar Developed Markets Dividend Leaders ETF has been able to beat both the Global 100 and a global tracker, which is seen by the yellow line that is the top ranked fund in terms of performance if you look at the top right of the screen. Here's the criteria for inclusion in the fund. companies must have paid a dividend in the past 12 months. They must have enough income to have paid that dividend. Real estate investment trusts are excluded. They've got to have a 5-year dividend growth rate of 0 or higher and enough forecast earnings to cover dividend payments for the next year. And I think it's that forecast element that is quite important because it is forward looking, and it does imply that the Morningstar analysts are looking at companies in order to find the best ones to put into the fund. And then the weightings are around the total dividend paid. So higher yielding companies will score more highly in terms of rating than lower dividend paying large caps. Here's the VanEck Morningstar Developed Markets Dividend Leaders ETF in a bit more detail. So it's got 100 holdings, net assets of 1.6 billion. We've got the performance there, and we've got the PE ratio of the fund. It says is 11.2, which is pretty low. So there's really good value potentially in this fund. And then the price to book ratio 1.3, which again is pretty favorable. The country breakdown is US is only 20% because the US doesn't have many companies that have a high dividend yield, and it's got quite a strong rating towards Europe. In terms of the top 10, we've got things like HSBC at number 1, and the top 10 is 35% of the total portfolio, which isn't too concentrated, and it's saying the dividend yield is currently sitting at 3.8%. So we're paid to be patient while we actually get pretty good performance from a value orientated fund. Here's the historic yield performance of the fund. So in 2022 and 2023, it was able to increase the dividend per share. But unfortunately, in 2024, the dividend per share actually fell. And that might have been due to some of the very high yielding companies cutting their dividends and possibly getting excluded from the fund. But you can't have everything in terms of income funds. I still think this one has solid overall performance. And here's how the ETF ranks on the excellent Pick a Fund website. It's third out of over 100 comparators over 5, 3 and 1 year. I've put together an investment trust and ETF tracker. It'll tell you the top risers of the day, the top fallers and the most traded. It'll tell you ETFs making new 52-week highs as well as 52-week lows, or you can program the 52 to be things like 26, 13 weeks, anything you like. It'll also tell you the greatest movements over time periods, which could again be 4 weeks, 13 weeks, any period you like. To receive the spreadsheet and my ebook 99 Problems But the SIP Ain't One, just sign up for my newsletter on my website ianshadrack.com.